We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the CashFlowPro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of CashFlowPro, your daily real estate investing podcast and YouTube channel. I'm here today with Mark Pierce of Cloud Peak Law Group, and he is based in Wyoming, and we all know how hot the Wyoming LLC is. It's like the big thing to do now. Everybody used to always say Delaware, 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 and now it's like I don't even know how many years Wyoming has been the place for the LLC. I guess it's probably been since the LLC really got big, right, Mark?
Well, that'd be right. Wyoming was the first state to come up with an LLC.
Wow. Interesting. All right. Well, listen, Mark, tell us a little bit about yourself, what you do, and then we'll kind of dig in on some different topics of why it's beneficial to do business there.
Well, I'll give you a little bit of background. I started out with a degree in accounting and statistics from the University of Wyoming in 1979. Went to work for a large accountancy firm, passed the CPA examination in the first sitting, and came to a pretty quick conclusion that I did not particularly enjoy being an accountant.
Yep.
I respect accountants. I certainly respect what they do. I think they're absolutely invaluable, but it wasn't something that I could do. And like I tell people, I was at this large accountancy firm long enough for a cup of coffee, and it didn't get cold. So I went to work for an offshore drilling company as a management trainee, hurt my back, and went to law school. After I got out of law school, like John Grisham said, it's the great American repository for directionless postgraduates. And at that point, I was directionless, so I went to law school. And I got out and I became a tax attorney and litigated cases in the tax court, became involved in mergers and acquisitions, went through a number of different permutations with law firms, and then I ended up in trusts and estates about 25 years ago. And I moved back to Wyoming about 10 years ago and put together a company that does commoditized legal formations. So we do a lot of trust work. We do a lot of limited liability companies. We act as a domiciliary for companies that want to domicile their profits in Wyoming. So in a nutshell, that's what we've been up to. We've currently got about 8 computer programmers and a whole host of people doing a variety of things. And we have physical presences in 5 states, and we have presences throughout the United States as well for corporate formations and LLC formations. We offer quite a lot of tax advice. We have LLMs on staff, and we work to provide the small businessman access to an inexpensive and above board solid legal arrangement vis-a-vis the formation and operations of the business entities.
Wow. Okay. That's a lot. And it seems like you all cover a lot of facets of just business in general. Like just, I mean, if you look at everything from the formations all the way to the tax and all that stuff, I mean, that's a pretty broad array of stuff that you all cover, and especially in so many states. So, well, let's talk a little bit about, like I said, we're real estate syndicators and capital raisers, and then there's obviously the audience is investors in different LP type deals and so on. But let's talk a little bit about structures of some of those things and liabilities that come along. And I always, anytime I have an attorney on here, I always try to preface the discussion with, some of these things are opinions, right? I mean, because it seems like a lot of people tend to lose sight of the idea, that their opinions. Yeah, some of the stuff transfers into law, but when you have an opinion about something, that doesn't mean that somebody can't oppose that opinion, right?
Yeah, I mean, if you have an opinion on an area of the law that has a number of different sides around it, then you can take and you weigh and measure the opinion and fit something that makes sense to you. But by way of an example, I had a friend of mine years ago who was giving advice to underwriter who said, well, you're advising me that I can't close this offering because I haven't complied with the statute that the Securities and Exchange has in place. And he said, commission has in place. He said, that's what I'm advising you. He said, well, I'm making a business decision to do this, then I'm going to ignore your opinion. He said, you don't understand. I'm telling you that this opinion says that if you take this action, you will violate the law. Now, there's not two sides to that opinion, but on many issues, and the guy ended up going to jail. So it was a pretty good opinion, I think. So some opinions are better than others. Some areas are gray, some are not, some are black, some are white. If you've got a mistress and you're trying to run her payroll through your company, you're probably going to get that set aside. But if you have an automobile and you're a salesperson and you're making sales calls, that's not going to be set aside. And it seems to me that in litigating with the Internal Revenue Service over the years, they've done a pretty good job at really getting to the heart of what most issues are. And you can always come to an accommodation if your client's reasonable. So this new thing about putting the fear of God that you've got 87,000 IRS agents coming after you with guns, no, you don't. I know a lot of IRS agents. They're not packing guns and they're not coming after you. They simply want to pay the taxes that are due.
Yeah. Yeah. And that's what I think a lot of people were like, oh, no, now we're going to have all of a sudden people are going to, they're going to add all these extra agents in there. And now they're going to up the audit process. And the IRS has been operating probably at 50%, I would say 50 or 60% the capacity they've been needing to operate at for years.
They leave a lot of money on the table because of tax fraudsters and people that are taking deductions and whatnot that they should not be taking. They're basically an organization that's mired in the 1980s because they've been unfunded to the tune of $80 billion over the last 30 years.
Yeah.
So, my view is I pay my taxes. I've been audited 3 times, general audits. They're not going to audit me again because they know that I'm telling them the truth. But you got a lot of people out there that cheat. I don't have any truck with tax cheats. Pay your taxes and get on with it. We live in a great country. Somebody's got to pay for the roads.
Yeah. Yeah, I would agree with that. And then, the people that pay the smallest amount of taxes tend to cause the most, the biggest stir. You know what I'm saying? Yes, because maybe it's a bigger percentage. I'm not sure. But anyway, so I'd like to talk a little bit about Wyoming versus Delaware. Let's put it head on. Tell us a little bit about so the corporate stuff in Delaware, the LLC stuff in Wyoming, what makes Wyoming beneficial over Delaware? And then, of course, there's always the corporate veil discussion of the LLC.
Mm-hmm. Well, those are 2 excellent points. The veil discussion we'll save for a little bit later because there have been some really recent developments that boost that quite a lot. With respect to Wyoming, there are a number of things that make Wyoming beneficial from the standpoint of formation. The most significant of which for most people in a real estate context and putting the syndications together, having holding companies, underlying subsidiaries, that sort of thing. 2 things. First of all, we allow series LLCs, which reduces your administrative costs. The second thing, we recognize single member LLCs. There's only 8 states in the United States that recognize the sanctity of that single member LLC interest from the standpoint of attachment by individual creditors. So if you have a single member LLC that owns real estate and you hold that single member LLC interest, that interest cannot be attached on any form other than a charging order. Charging order basically says if any distribution ever comes out of that LLC to that individual directly, you got to pay it over to the creditor. But that creditor cannot attach that LLC interest and force its way into the LLC or attach that LLC interest and sell it. So Wyoming recognizes that it's one of 8 states to do it. So in a real estate context, when you're putting holding companies and underlying operating companies together, that gives you a substantial advantage under Wyoming law. Second thing is that Wyoming has a general rule that says if you get a judgment against a Wyoming LLC in a foreign state and they misapplied the law, Wyoming can set that aside. In other words, full faith and credit does not apply to that particular interest. We're not going to recognize that judgment in Wyoming. We will relitigate it in Wyoming to make sure that you get it right. Third aspect is you can't get to Wyoming from anywhere else. And I'll give you an example. I have a client of mine that started out from Atlanta. It was sometime in late January, early February. It took him to get from Atlanta to Wyoming and back took him 5 days. Snowstorms, flight cancellations, slept on a linoleum floor in Minneapolis for a night, that sort of thing. So then you have a dearth of attorneys who are available to take on cases. If they're any good, they're already overworked. So it's difficult to litigate in Wyoming as well, just because you need to go find talent to do it. There is talent there, but they're pretty well booked up. So it's impossible to get in front of a judge at some point in time with a meaningful attorney to prosecute cases. And even if you can, the law has a tendency to rule against you.
Wow. Okay. All right. Now, there's also the argument that no, let me back up. So, Delaware, somebody requires you to file a notice that says, hey, this LLC is doing business in, like, if it's Delaware LLC and I'm doing business in Kentucky where I'm at, I have to file a notice that says, hey, this LLC located in Delaware is doing business in Kentucky. And is that the same standard does Wyoming have that same rule?
Well, what will happen if you have a Wyoming LLC that wants to own real estate, say in Kentucky, then you have to look and you have to say, okay, what does the simple ownership of that real estate entail? So you'd have a holding company that owns a subsidiary that owns the land, and then you would have a management company that actually conducts the operations and the management of that LLC and that real estate property. That way you separate operations from the ownership of the property. Yeah. You might even have a separate LLC that owns the land underneath the real estate development. So you'd have a land ownership LLC, a real estate, the fixture or the building LLC holding the building. And then the third thing that you would have is a management company that manages that building for the benefit of the real estate and for the benefit of the land. Well, based on that, the two ownership interests that you have in the two LLCs that own the land and the real estate building, those probably do not have to be registered in Kentucky because passive ownership of a building is not actively conducting business.
Correct.
But you have to make that assessment state by state. But the management company would have to be registered in Kentucky in some form, a foreign registration to do business there. And then what you do is that you run the money through that's necessary to run that management company, pay the day-to-day operating expenses, but no more. Then you transfer the excess of working capital up into that holding company, and that way you minimize the amount of money that's in Kentucky that in the event of an issue could be attached.
Wow. So you're minimizing your risk, and that's why. So is there any of that structure that should be formed in Kentucky, or should it all be formed in Wyoming?
Well, the management structure, the management operation, the physical management and operation of that real estate development, if you got commercial leasing and that sort of thing going on, that should be done by a Kentucky LLC. And that should have people in Kentucky who do that. The actual ownership of the land and the actual ownership of the building itself should be in LLCs that are owned in Wyoming.
Okay. Gotcha. Now, I'd like for you to real quick just to dive in on the benefit of I know a couple of definitely good points about a single member LLC, but I'd like to hear it from you just to make sure, just to validate what I think I know and to also benefit the listener in what is in fact.
Well, Wyoming has what they call a closed limited liability company supplement. So once you elect that supplement, and we, as a matter of course, for somebody who opens an LLC as a single member, we check the box that says it's closed LLC. You don't have to engage in any of the corporate formalities that LLCs generally have to engage in. Annual meetings, special meetings, distribution consents, contribution consents, anything along those lines are not required to be in writing in Wyoming. Just recognizes the efficacy of a business that does business over a coffee table. The only thing that you can really get in trouble with in Wyoming is not separating out the expenses of the individual owner and the LLC. In other words, the LLC is treated as though it were a checkbook for the personal expenses of the individual owner. And that you could draft around, pretty easily. If you need to make a payment on your credit card, don't run it through the LLC. Have the LLC make a distribution to you of excess profits, and then you make a payment for that credit card. So that is, I think, in my mind, one of the great efficacious benefits to having a Wyoming LLC is that you just don't have to engage in corporate formalities. And then that way I know that when we predominantly relied on corporations, we sat down and did annual meetings every year. And I can just be honest with you, there were a lot of clients that would just date, 2001, 2002, 2003, and execute them all at the same time and put them in their book. And it was the same thing with like substantial investment alternatives and things like that. We're going to buy a building. Oh, yeah, we need minutes. So you draft up minutes from 3 years ago and sign them. So it gets us over that hump. And it says, look, most people don't do business that way in a closed setting. So we're going to get rid of that. So anything other than commingling funds or engaging in fraudulent activity or some sort of criminal activity, you're completely protected in Wyoming with the closed liability supplement.
Yeah. Now,
I'm sorry. Go ahead.
I had a gentleman on here on my show about probably 2 or 3 weeks ago, and he had actually went to prison because back in 2008 the market started crashing, and of course things happened, and it wasn't the fact that he lost money, it wasn't the fact that he had it didn't have anything to do with the business. It had to do with the fact that he was using different LLCs, and he was basically commingling funds, covering from one, praying for a long shot that the market would rise. Once it got to the end, and then the judge was like, hey man, you can't take money from all these LLCs and do all of this. It just doesn't work like that. So they ultimately ended up finding him guilty of, I can't remember, he said one violation of wire fraud or something like that, and then he ended up doing some prison time anyway. Super nice guy. You could tell he was not a hardened criminal of any kind. He's actually back raising money and back doing business. He got some type of, the SEC finally forgave him, and anyway, he's back doing business. So, but once that money transfers from one LLC to another, does that open up the risk of all of them to the same potential adverse, like something happening? Does it then open them all up if they're all sharing money? What is I guess I'd just like to know a little more definition on what the LLC actually protects.
You have to ask yourself, why is one LLC transferring money to another LLC? What's the relationship? And if you've got three, like in the example that I gave earlier, if you've got 3 LLCs owned by a holding company, why would those LLCs make payments to one another? Well, the management company might make a payment of a mortgage obligation on behalf of the LLC that owns the building. But what you would do is you would say the management company is collecting the rents, and then the rents are being remitted to the building company so the building can pay their expenses. Now, that's an intra-company agreement there, and that's a contract because those 2 parties are not related. They have overlapping membership interests, but they're not related. So if you're going to make a distribution from the management company to the holding company, you have something that says, look, we have sufficient working capital reserves to maintain the ongoing business operations of the management company, and we're distributing the excess to the holding company. So you've complied with the law there. And then if there's a investment by the holding company in one of those LLCs, then there's a notation that says this is a loan, and then you document the loan. And we've got forms that do that all day, every day on our website. Or it's a contribution of capital to the membership interest for the LLC. And you document each one of those transactions. But when you start moving money back and forth between those LLCs and confusing one LLC with another, and for terms of financial reporting and making your statements to a bank, what are you reporting as being your assets? Are they in fact your assets? And it seems that that's probably where the gentleman got into trouble, is he just lost track of who had what and just put them all into one pile when he started having financial difficulties. So that's what he ended up in trouble with. So you got to watch that flow of money, and you have to articulate how it works. You have to have your accountant sign off on it, your attorney sign off on it, and then you have to follow it. And I just got off the phone with a gentleman earlier today, and I said, look, you can spend $500, $600 on a couple of conversations, get it all right up front, understand it, and you're going to save yourself hundreds of thousands of dollars of problems and months of litigation difficulties if you don't. And so That's what I advise people is get it done right up front, understand what your obligations
Well, and
are.
it's so, and I've been involved in that too. It's so easy. It's so absolutely, well, it's not necessarily it's easy. It's usually most convenient to be like, oh
Yeah,
man,
convenient, that's a good phrase.
I went to Lowe's and I spent $500 buying this. And then just the LLC just pays the Lowe's card or just pays me back or whatever. And and while that type of transaction I assume is okay, it still comes down to what questions does that open up, and questions whether right, wrong, or indifferent have to be could potentially have to be defended
Yes.
at some point.
Yes.
So
Yeah, absolutely.
that's what's that?
Absolutely. When you went to Lowe's and you bought things, what were they for? And you filled out an expense report. You provided the substantiation with the invoices to it, exactly where it went to and why it should go to that LLC, and they reimbursed you the cost. That's above board. That's not a problem.
Well, and again, I went through a divorce, and so while doing things, again, to reiterate what I meant with my last point, while doing things, and the intention is obviously above board and clear as day, how somebody wants to make them seem in a court setting increases the cost of defense. So I guess what I'm getting at is not necessarily that what you did was right or wrong. If you're leaning towards the side of right, it's the fact that whatever you do has to be, you have to be able to defend it at some point, and you want to be able to defend it as fast, as precisely, and as cheap as possible, right? And a lot of times, none of that happens. So, well, let's talk a little bit about. I want to talk a little bit about is there any tax advantages for the Wyoming stuff? And maybe you mentioned something earlier. I'm trying to keep track of everything you've said because it's so much. But I'm wanting to. Is there any tax advantages to being to having the Wyoming stuff set up that way, or is it pretty much purely just liability and so on?
Well, liability is the overriding factor. The taxes are interesting. A lot of LLCs, you can elect what tax structure you want to have. You can be a C Corp, an S Corp, a partnership, or if you're sole proprietorship, just a pass-through entity. The LLC itself does not have a tax identity. You have to select the tax identity. And for years, people say that, well, the best thing to do is to select the partnership designation if there's two or more people involved in it, because you can write through more partnership expenses than you could if you were under some sort of different tax level, like a C Corp. I think that's quickly coming to an end because the IRS has been authorized to begin auditing more substantially the tax returns for partnerships. And there's a number of issues going on within the LLC industry, state to state and nationally, in respect of that. But what it comes down to is that if the IRS audits the entity itself and then makes an assessment against the partners, what right did the partners have to participate in the audit that resulted in their liability? So what they're trying to do is to get an act together that said, look, we're going to put this thing together. We're going to audit these processes. There's transparency to it. Everyone gets an opportunity to participate, and then this is the tax result. So for years, they said that you could wash more expenses through a partnership than you could through, say, a sole proprietorship. Whether or not that's going to remain the case, I don't know. But the advantage was substantially in favor of that partnership for a number of years versus a sole proprietorship.
Gotcha. Okay. Well, and that's interesting. And it's like you said, and again, we get into so many different tangles of one or the other. Now, I want to talk, you made mention earlier about an LLC that basically like physically owns the dirt, and then an LLC that actually owns the building, and then an LLC that actually manages the property. And what states does that actually happen in? I know like in Kentucky, things that like we have a theory of attached property, right? So like if you own a house and the chimney is attached to that, or if you own a piece of land, that house is attached to that land and you want to take the chimney with you, well, that chimney is attached to that house, which is attached to the land. And so what states would something like that be or what situation would that need to happen in?
Yeah, I don't know. Does Kentucky have an income tax that they assess against corporations and individuals? They
Yes.
do. Yeah. When you're looking at domiciling your LLC outside of Kentucky, but yet all your source income is from Kentucky,
Yeah.
well, Kentucky has a right to tax that, and the Supreme Court's recognized that in every case that it's ever come up with. So that's a dead issue. So if you own land in Kentucky and you're getting paid for owning that land and someone's leasing it from you, you're going to have to recognize those revenues in Kentucky.
Yep.
So
Absolutely.
you're not going to get away from that. But if you have an e-commerce company, the management company in particular, because you're delivering services in Kentucky, not delivering them in Wyoming.
Hi, this is Casey Brown, host of the CashFlowPro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making CashFlowPro part of your day. Now, back to the show.
So those would all have Kentucky tax forms that would have to be filed. If you have an e-commerce company that's matching orders and making payments and doing things and domiciling it in Wyoming with workers who are engaged in that process throughout the United States, then you can domicile those profits in Wyoming because that's most substantially attached to it because that's where your server is. Now that's an issue that may begin to come up over a period of time. And there have been some cases that have brought up on the tax side, but that's substantially how it works right now to re-domicile those taxes away from states like California into Wyoming, where you can save 14 to 12% on the tax burden.
Wow. Okay. And that's, and everything, the thing that I've realized about all these structures and everything is it all makes perfect sense. It's just a matter of trying to determine what's the best use or the best case for your scenario. Right. And that's always seems to be the bigger picture is what scenario matches these different structures. Now, the single member LLC, here's the way that we structure things when we start looking at it like from this perspective. Now, I've actually seen a limited partnership that has a managing member LLC that is the only, I'm sorry, trying to think. So you got a limited partnership that's split into GP and LP, right? And then you have a managing member LLC that is the manager of that partnership. Then you have another LLC that manages the single manager LLC in order to keep that all separate, I guess. And then effectively what it amounts to is the limited partnership becomes basically an unowned entity other than GP and LP. Or I'm sorry, one member is the member of the managing member is the GP, and then the LPs are all insulated, of course, by just being passive investors. Does that make sense?
Well, that's been the overriding way in which a lot of real estate developments have been put into place for the last 50 or 60 years, isn't it?
Yeah.
I personally think that the limited partnership statutes are kind of an historical anachronism. And as these LLCs begin to develop, particularly the series LLCs, where you can own a number of properties underneath one holding company LLC, if you will, one LLC at the top with series that come down, and you isolate the liability between the two and you recognize that, I think that'll be the way that real estate development evolves into the future. The difficulty that you have with these series LLC statutes is that they have not been well litigated so far. They're just fairly new. And I think courts in a lot of, I think it was 17 states that had series LLCs, last count that I had. And if you run into a series LLC in a state that doesn't recognize series LLCs, how do you explain that to your bankers? How do you explain it to the state? How do you explain it to the licensing commission if you need to do business there? So I think it's a great idea whose time has not come yet.
Yeah, I would agree. Okay, awesome. Let's go ahead.
No, I was going to say The holding company LLC with LLCs underneath it, though, you can contractually put together what you want, which is a lot like a limited partnership, but you don't have the overriding statutes that you do with the limited partnership that you have to comply with. So I think it's an easier contractual obligation.
Yeah. It makes sense. And again, it's all kind of in the eye of the beholder, what makes the most sense for that particular deal or that particular setup. And then maybe you have, have some, and then it kind of all depends on where everything falls in the capital stack, as far as the debt stack goes and so on and so forth. So, all right, awesome. Mark, you've given us a ton of information today. I want to thank you for that, first of all. Number two, we've got a couple of questions we ask every guest that comes on the show. It's just to get some opinion about who you are, what makes you tick, and so on and so forth. But the first of those questions is, what is the best book that you've recently read or are currently reading?
Oh, gosh. It was Douglas Hofstadter's I Am a Strange Loop about what do you mean by physical, what do you mean by intellectual competence? How does your brain work? Why do you think the way that you think? Why is it you perceive things the way that you perceive them?
Yep.
And the great thing about it was there really wasn't any answer. So if you're looking for an answer to things, I guess you can find them, but they're generally wrong. It's like Dick Cheney said one time. He says there's a simple answer to every problem. The problem is that it's generally wrong. So
that's right.
When you look at issues and problems and whatnot, think more, react less, give yourself some time with them, and allow yourself to really put it into context and work your way through it. You're given a wonderful mechanism right here. Take some time to use it.
Yeah, awesome. You're not wrong about that. And a lot of times I am guilty of not using that mechanism myself. So, all right, next question. What is a dream vacation that you've either taken or hope to take?
Oh, wow. Dream vacation. I'll tell you, my wife and I just recently went on, she's a retired college professor. She took a gig on semester at sea. And we spent 4 months cruising the Mediterranean up into the North Sea and around the Scandinavian countries and back into Germany. So I got to see places like Cyprus, and I never thought I would see. I didn't know where it was. And then Malta, another one, just magnificent places.
Malta is on my bucket list, definitely. Malta is one of those places right off Spain, right? Right, just a little bit south of Spain. It's definitely on my bucket list. I mean, just such a interesting. That's pretty neat. 4 months.
Yeah, 4 months. And then, I was able to run my company remotely. There was an 8-hour time difference, but, I got my emails. I got everything I needed to do. I did podcasts like this on there and worked out pretty well.
Man, that's pretty cool. That's really probably one of the coolest things I've heard. Well, cool. All right. Well, Mark, listen, if the listeners heard something or they want to reach out and get in touch with Cloud Peak Law Group, or they want to reach out and get in touch with you, or maybe even they have business they want to do with you, what is the best way for them to reach out and do that?
Well, we've got a website, www.wyomingllcattorney.com. We have customer service representatives and salespeople who can help you through a lot of issues free of cost. And if you want to book an appointment with me, then that's available online as well. You can book an appointment. I generally find you're going to have a hard time finding a good LLC attorney who books half-hour time increments, but I'm glad to do it.
Yeah, you're exactly right, especially one that's competent, that knows what you know. I mean, there's a lot of claiming to know a lot of stuff that goes on in this business, and sometimes you have to be very, very careful. So anyway, awesome. Well, listen, thanks again for taking the time to be with us. And listeners, as always, please head down and leave us a 5-star review, and also type a review so that others may know what we talk about and what you liked about on the CashFlowPro podcast. And while you're there, please smash that subscribe button so that you can be notified when we release new episodes. And you will never miss an episode as long as you're subscribed, because it'll pop up and tell you, and then you can come in here and join us. And Mark, again, thank you so much, sir, for your time. I know, I don't know what the bill rate is for it, but it's probably pretty high for what you just dropped here for him. So I want to thank you again for that, and I hope everybody has a wonderful rest of the day. CashFlowPro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.